Welcome, everybody. Dr. Keith here. We'll get started here in just about 30 seconds. Happy Tuesday afternoon. Okay, so this is being recorded, everybody. And it will be sent out after tonight's webinar. Okay. Can everybody see my PowerPoint slides okay and hear me okay? Just type in a Y. If you can, just want to make sure everyone can hear me okay. Thank Jorge, Bill. Good to see you. Peter. Okay, so I'm really excited to present to you for a couple of reasons. Divergence. I may look at it a little bit differently than most, or maybe I don't, but I get a lot of questions on divergence, and it's something I've used for many years. The difference is in the past, I haven't had a program where it would just show up on my chart. So I'd always have to do the manual looking, divergence is really powerful. So I know most of you that are logged in here probably heard of it. You may trade it a little bit, but this should be pretty exciting to you as we go through it today. Okay. Yeah, so you can trade divergence on all markets. Okay, and I trade all markets. I trade the futures markets. I trade the Forex markets. And then obviously I trade stocks and options. Okay. And divergence is something that's extremely powerful. So with that, folks, we'll get started today. And as you have questions, feel free to type them in, or if you have comments, and I'll get to them as I pause. Okay, I am going to get to live charts today. I suspect will be, I don't know, 35 to 45 minutes today. I try to keep them well under an hour to keep you going here, but it's some good stuff, and I definitely want to make sure I'm covering it for you all. Okay. Okay, so before we get started again, it's definitely important to understand your risk. So I always pause a couple minutes to let you read this, but basically what I like to summarize for my clients is this: you should never trade with money you can't afford to lose. One is, if you're paying the mortgage with it and you don't have experience, you're probably going to lose it. So you want to be very careful. But more importantly, from a psychology standpoint, if you need the money and you're trading it away, okay, you're not going to stay in position. You're not going to follow the rules. Okay, this is over years and years of trading and research myself. I can tell you that. So again, make sure you're trading with money you can afford to lose. So for today's agenda, folks, we're gonna focus in on divergence. Okay, that's really all I'm going to focus on today. I'm going to give you examples of divergence so you can see how it works. And then I do have a special offer at the end if it's interested. I have a divergence product that is available for Thinkorswim, okay, today. I know most of you use it. I also have a product that's coming here in the next month or so for TradeStation as well, okay? But today is basically what's going to be offered is going to be for Thinkorswim. Okay, so how many of you have heard of divergence? Again, feel free to interact, type in a Y or a no. Again, I may have a little bit different twist on divergence than many, not necessarily in what divergence calculation wise is, but how I use it. It looks like most of you have used it or seen it and read about it. Right now with technology, it's really easy to really do your research on stuff, right? Okay, Bill, so that's great. So you know about it, you just never used it. So more than likely today, I'm going to show you some ways that may be exciting to you. But when I look at a pure definition, grabbing it right out of Investopedia, okay, it's when price of an asset is moving in the opposite direction of a technical indicator. Most of us will use an oscillator, okay, when we're gauging it again. So you may have a price going one way, but a momentum indicator, something that gauges that movement of that underlying going in that opposite direction, right? So divergence, again, warns that the current price trend may be weakening, and in some cases may lead to the price changing in direction. And I know out of the 50 people that are on this live session so far, a big portion of you love to pick tops and bottoms. How do I know that? Because in all honesty, that's how we make money as professionals. We make them off of you, okay? And I don't mean that to be mean, but it's a fact that most traders, when they see a price going up, they think it's time to get out, and vice versa, okay? And it can only go up so far. I hear that all the time. Or it can only go down so far. And in these market conditions, that's just not really the case. Things can go up for weeks and weeks and weeks. You just don't know it at the time, right? I mean, look at something like Home Depot, for example, right? So we're going to really focus in on that. But, you know, again, divergence is a powerful trigger that I like to use, though, and I'm going to explain how. So how do I define it? Basically, when you have a new high in price, okay, but there's no new high in RSI. And I'm just looking at a traditional normal setting RSI indicator, okay? You may ask me why. Because I've tested every oscillator out there, and I have found that the traditional RSI does the best job, okay? So in my opinion, from what I've looked at, it's better than MACD and stochastics and some of the other oscillators, okay? Or it can also be a new low in price with a new low, with no new low in RSI, right? So you're basically getting a new low or a new high, but the oscillator is in disagreement. So you can go to your charts and you can put in like a traditional RSI and you can look at highs and you can kind of do the analyzing, and you're going to be pretty impressed with it picking tops and bottoms, right? The problem is we're all busy. We all look at lots and lots of different opportunities to trade. Again, I trade all three markets, right? So I could be going through thousands of charts if I didn't have ways to, you know, to make that easier, right? So with that, I like to use divergence as a setup only. And what I mean by that is once I see divergence, and again, I'm going to show you, of course, all this in live charts. But once I see a setup, I still need a trigger. Okay. And then again, those of you that haven't followed me for a while know, my favorite triggers, you know what those are. But the bottom line is divergence is a fantastic setup in all time frames. Okay. I'm going to show you different time frames. The key there is making sure you understand then, again, do you have an actual trigger then with that divergence? Because sometimes with divergence, it may take a few bars later to actual trigger, okay? Other times it happens right away. All right, so are there any questions on divergence before we get into some of the meat and potatoes here? Okay, if there are, again, type them in and I'll get to them. So here's an example. I know it's just a picture and it's not the greatest example on the chart here, but here's an example where you have right here a high. Okay, this is actually Tesla. And at this king right here, you can't see the arrow here because there's the bubble for the high. But we had a new high in price. Okay, but this is a MACD. You can see that we didn't have a new recent high in the MACD. Okay, so by definition, you have divergence. Okay, and what you're going to see from when I go over some examples is that when you're in a really strong uptrend, usually divergence is going to come down a little while, maybe to the 20 period, to the mean and then revert back. But that's your chance to make your decisions once you get that divergence. And again, I'm going to show you my strategies of doing this. Divergence does not mean all of a sudden you've picked a top in the market or a bottom in the market and it's going to go, down or up the opposite direction for years. Okay, it just means that you may be at a potential short-term top or bottom, or maybe longer. You just don't know at that point. Okay. So when I trade divergence, again, you can trade these on all time frames. Okay, you're just going to have different risk, right? Obviously, most of my trading is swing trading. I like to trade off daily charts. Why? I make the most money off daily charts. I spend the less time doing it. Okay, that's the main reason. Been doing it for years. I work a couple hours and then I go play. But divergence is something that you can work on all time frames. Those of you that are part of my day trading on Wednesdays, we trade off a 5-minute, a 233 tick, right? Different time frames are going to give you that divergence. The shorter the time frame, the more divergence signals you're going to get. Okay. The indicator set up though so that no matter what time frame you have, it's going to show you those opportunities in the past, okay, and then when it happens in real time. So the way I like to do it, folks, is if it's against the trend. So when I was showing you that Tesla chart, right, you're basically battling an upward trend. Everybody knows that attends my Wednesday webinars that I really do believe the trend is our friend. Okay, I like to trade in the direction of a seasonal movement, preferably when it's in the direction of the overall trend, right? Because that's what the institutions are doing. So we want to follow those institutions. But divergence can pick tops, okay? And if I'm going to go against that trend though, okay, I'm going to do it for smaller profits. I'm not looking for a big move, okay? Typically what I do though, I like to trade divergence where if I'm in a trade and then I get divergence, okay, that's when I'll exit the trade, or at least part of my trade. Okay, so I'm not a big bottom or top picker, as I mentioned earlier, but the way I use the divergence indicator a ton is that once I'm in a trade, it's got a nice move, I'm making money on it, and then you get divergence in the opposite direction. Okay, so if you're long and you get a bearish divergence, I like to go ahead and at least take partial profits or exit the trade, because I know there's a high likelihood we're going to get a retracement in the next few bars before another potential move back in that direction. Okay, and that's where I think most people go wrong, is you're always trying to pick tops and bottoms in a strong market. Okay, and that can be brutal. So when you get those, go in the direction of the overall trend. But if you get a bearish divergence, you can go in, if you're risking that, you can go in there for a shorter time frame, take a few profits, and then get out and then wait for that pullback. Okay, so again, I'm going to show you lots of live charts here, but that's the main way I like to do it. So if I get a bearish divergence right now, okay, that's what I'm looking to do. If we get a bullish divergence back in the direction of the trend, then I like to go in a full size once I get my trigger and hang on to that trade longer. Okay, so again, not to confuse things at all, just remember the trend is my friend. So I will stay in trades longer that are going back in the direction of the trend. The counter trend trades going against the grain opportunities, I don't stay in those nearly as long. Okay, and I'll show you some strategies there on charts. So again, one of the cool things you'll see here in a minute is you're not even going to see the traditional RSI on my screen because I don't use it for my trigger. I just use it for divergence, okay, behind the scenes. So I like to use two actual triggers. Okay, so let's review first. First, divergence is a setup, meaning I'm not going in just because of divergence, okay? I need a trigger once I get a divergence signal. I like to enter in divergence one of two ways, and you can use any way you want, folks. Whatever oscillator you use, whatever your strategies are, you can use this in conjunction with divergence. But I like to enter with Hackenacci. Okay, so if I'm looking to do a short play because of a bearish divergence, when Hackenacci turns red, that's when I take the signal. If I'm going back to the long side, I get a bullish divergence when Hackenacci turns green, right? But again, I'm not going to go into a big Hackenacci explanation today. That's not the purpose of this. Although don't get me off on a tangent because everybody knows I love Hackenacci. And then also, obviously, my number one trigger for about 5 years now is the Laguerre RSI. Okay, so not regular RSI, the Laguerre. So once I get that traditional RSI divergence, I then look for either a Hackenacci dot going in the direction of that divergence or a Laguerre or both. Okay, so again, that's how I like to handle divergence. Okay, so now let's go over examples to kind of drive it home because it's a very simple concept. It's just something that in the past, in my opinion, has always been hard to incorporate into trading because we don't like to always have to sit there and look at charts intraday trying to find these type of patterns, right? So can everybody see my Thinkorswim charts okay? Just want to make sure before we proceed that you now see Think or swim. All right, thanks, Pete. Okay, so here's an example off the daily. I'm going to start with the daily chart. Okay, see the D up here for daily. So what I've done, and I've highlighted the colors today, just so it's easier to see for everybody as you're kind of learning this concept. Okay, but this dotted white line is saying there's some divergence forming. Okay, so right here is when we got a new high in price. Okay, and folks, these aren't, in this case it is, but they don't have to be all-time highs. Okay, just based on my secret sauce, it's a new recent high. Okay, this happens to be an all-time high. So we got a new high in price, but again, from the traditional RSI, we didn't get a new recent high in the RSI. That's divergence, folks. So then it paints a red arrow saying, okay, we now have divergence. Okay, so the overall trend at the time, let me kind of blow this up for you. Okay, see this trend here? It's in an uptrend, right, Neil? So again, if I'm looking to counter trend this, I'm not looking to get large profits, okay, because we're fighting the institutions. But where this can help you is if you were in this trade long, okay, this is your exit point for sure, okay, at least part of your trade, okay? But then if I was going to look to counter trend trade this, again, I like to keep things effective and simple, folks, okay? See the red Hackenacci candle right here? Okay, that's my enter. Okay, that's my enter, and I can write it down, make a few cents, and get out, okay? The other thing you can do is once it triggers, you can even go into a smaller time frame, let's say a 4-hour, and say once I'm in the trade, I'm going to stay in until the 4-hour turns green on Hackenacci, okay? That's another way of taking those type of trades, okay? So I'm going to go over lots of these examples so they drive it home, but you can see the divergence, the arrow, and then the move, okay? And this happened to then have basically a triple top, and then it was a start of a larger move down here on Neil, right? Again, this is off the daily. All right, so over here are some of the daily examples I want to show you, okay? This is crude oil. Again, you can do this on anything you want to trade, okay? So here's an example where you can see that on crude, we've been in this massive uptrend. So what I would love to see, folks, let me be clear, and I'll show you some bullish divergence, which will be down here. Those would be my favorite setups. But let's say you were long on crude back here in November, okay? This could be your potential exit point when we had the bearish divergence right here. See that all? Okay. Then we had another bearish divergence right here on January 8th. And then we went sideways to down, right, for several days. You see how that happens? So it's a great way of protecting your profits, or if you're going to counter trend trade this, okay, you just want to keep tighter profits. You would have got in here, you could have made a few cents on that, right? You could have made roughly $1, 80 cents or so on that trade down, okay? And then we have one right here. Then we had the move down. Divergence is super powerful, okay? Super powerful here. Especially when it's down here, which I'm going to show you some examples of bullish divergence, because then you're going back with the direction of the trend, okay? So to summarize here, okay, I'm not really shorting these opportunities, okay? What I'm doing is if I'm already long crude oil, this is when I'm exiting, okay? That's how I use it for when you're against the trend, because picking tops, very, very tough to do, to be consistent and make money on that. All right, the ES, right? Everyone loves to trade the ES. So again, massive uptrend, right? What I'd really love to see is a bullish, divergence. We don't have any, okay? So right here, we had a divergence right here in January, okay? And you can see price went down. And this, by the way, folks, let me just show you. I just put on here for today's purposes a 20-period moving average to show you trend, okay? So we had a trigger right here on the ES. And again, if you were long on this, like many of us like to go long on the ES right now, right, that would have protected you some heartache in the near future there, okay? So that's how I like to use it. Here's a current one that recently happened, AMTM, okay? Now, if I'm going to fight an uptrend like this, I'll do it on one my favorite trade is this. When you get an all-time high and divergence, okay, that's super powerful, folks, because what happens at new highs, you get a lot of folks getting stopped out and a lot of institutions taking profits, right? So you're going to get a decline probably at least to this 20 period. So you can go back and look at your charts. When you have divergence with new highs, you're almost always going to get that reversion back to the mean, okay? Sometimes more, but at least that reversion back to the mean. Make sense? Here's one on Aviat Networks. So again, we had the nice move up, a new high, divergence. The arrow is the day that the divergent paints. Okay, so once that paints, this arrow does not go away. Okay. And there you have it. Okay, let me just blow that up a little bit for you. Okay. Now, again, let's define when I would have entered this. Okay. I can do that in a minute. Absolutely, Bill. So we have the divergence. I told you I don't take the trigger right on divergence. I wait for the red candle. Okay. So like right here, this is a divergence that wasn't all that effective, right? But we went 3 bars and the divergence is over. So we didn't enter. You see how Hackenacci kept us out of trouble there? 6 bars later, we got a red, but that's already over. Okay, if you're not going to take it within 2 to 3 bars, you probably want to forget about it. Okay. So Bill said, can we put RSI on there just to kind of show? Absolutely. Let me put that on there. I was going to originally, and then I just didn't want to flood the screen, but let me put that on there. I'm going to take it off too, though. All right, so here's a traditional RSI down here, folks. So we had a new high in price, okay? But this RSI wasn't as high as it was up here. Everybody agree? Okay, so even though we had a new high in price, we did not have a new high in the RSI. Super simple, right? So you would have to look at yourself and find these if you didn't have the indicator. That's all. It's not hard, but it's much easier just to let the indicators do its work, right? Does that make sense? Is that helpful? So again, new high in price. The RSI right here is not a new high. Okay, during this window. That's divergence. Okay. Okay. So again, what you don't know going into this, how big is the decline going to be, right? So you can let Hackenacci determine that. Okay. During this move, you can also say, okay, I'm in. Let's say you're in right here. You can then swap over to like a 4-hour chart and say, I'm going to stay in now until the first green Hackenacci. Okay, those are some ways that you can do that. Okay. And it will be absolutely, it'll be recorded. Okay. So again, repetition. Okay. Here's an example here. We had divergence. Right here is my entry. Okay. This is a divergence that would not have worked out. But again, folks, going against a strong trend is always risky. Okay. I would use this more for taking profits. That's where you have to think about using divergence as I'm already in the trade, I'm exiting it. Okay. If you were in this though, the next candle that closes green is when I would exit. Okay, I'm not going to lose much on that. Okay, I want to exit if it doesn't work. Then we had one here, same thing. Then you have your red candle, and this would have made you some money. Okay, but if it didn't, the next green candle is your exit point. Okay, so the arrow will paint intraday, but it won't stay. It can disappear until the actual close of whatever time frame you have. Okay, and I'm going to show shorter time frames in a minute. Okay, Christina. So you can see it'll actually show a label up here, potential divergence. Okay, and then what happens is, let's say it's a daily chart here. See, let's say at 2 o'clock it goes away because the RSI ended up being a new high as well. Okay, then this will disappear. But once it paints at the end of the day, if it paints, then it stays there. Absolutely, Don. I'm going to show several to the upside. Yep. We just happen to have a lot more bearish divergence right now because the market's in an uptrend. Okay. All right, here's another one, the Euro US dollar back here. So we had divergence. Again, when is my entry? I love it when we hit new highs, folks. Can't say that enough. Then there's the red candle, wham. Okay, right here would be my exit point. Okay, so entry, exit. All right, so here's a bullish divergence. Okay, you see the yellow line? Okay. So again, now let me bring up the RSI again to demonstrate that for you all. Okay. So back when this line started painting, you see the RSI down here? Let me blow this up for you. This divergence is lower than here. It might be kind of hard to tell, but this is divergence, and now you have it. Okay. So in saying that, we also had then a combo long with Hackenacci. Beautiful, beautiful divergence play. I love it at a low. Okay, I told you that's when I like to take them, because if it doesn't work out, the next candle, let's say you get a green and then this candle right here, folks, turn red, I'm out. Whether it's a profit, whether it's a loss, I would be out. But when you hit a new low, even in a strong trend, you can take this divergence and make money. Okay? Does that make sense? It happens all the time when you hit those lows. Okay. Okay. Here's another one on LifeMed. Had divergence right here. It's made its way back up a little bit. Okay. I also like this trade for a couple of reasons. Seems like a lot of support right here. Do y'all agree? Right? It came back, then we get divergence. We got a combo trigger long with this dotted line. You know, how far is this going to go? We don't know. At this point, we don't know. We just know that we had divergence and we got a green Hackenacci candle right here. I'm not even bringing in the Laguerre today, right? Just because I don't want to show too many things to confuse people. Okay. Netflix. Again, we had divergence right here. You're seeing the theme at highs, right? All-time highs, especially. Bam. Okay, it doesn't mean I'm bearish Netflix, folks, right? But if you could have got in right here, make some money, and get out, right? And again, the way to handle this is risk reward. If you get in, you can put your stop right above the high. I mean, you can eliminate that risk pretty quickly, can't you? Absolutely. All right, so you get the point, right? You get the point. Now, let me show you, before I go into some of the tools to find these, let me go into a 4-hour chart. So I'm going to change the daily to a 4-hour just to kind of show you how it works. All right, I'm going to blow this up a tad. And I think I actually saw something back there on Netflix. So yeah, here's one on Netflix that we had, divergence on the 4-hour. All right, so I got some examples I want to show you. So AMAT, applied materials. So folks, here's what I love about these type of opportunities. Okay, these are my favorite. Let me bring it up. And I don't know how far this is going to go now. But as a swing trader, okay, AMAT is a seasonal long right now. Okay, so I got divergence, and then I've got a green Hackenacci here. Okay, this is a no-brainer. I did a further out option play on this. Okay, but that doesn't get much better than this. Okay, so again, when you're in the direction of the overall trend, it reverts. This is a lower high. I'm sorry, a higher low. Too much coffee today. You can see how beautiful that is, right? These are my #1 trades right here. This is how I love to use it. All right, sorry about that. Excuse me. Choke myself up. I get so excited. Okay, so that's AMAT. Let me bring up HYG. Again, this is 4-hour triggers, folks. You can see the bullish divergence. Then nice move up. Okay. Again, I'm not looking to make huge moves on a lot of these unless they're the ones in the direction of the seasonal. US dollar, Japanese yen. Okay, there's a couple here. There was one here. Okay, made a little bit move down. Then it hit the high though, right? If we would have had divergence here, Is that clear now? That would have been my favorite, right? Why? There's a lot going on at these highs, folks. There's a lot of orders out here, okay? And then wham, okay? And then we had the bullish divergence here on the 4-hour on US dollar yen, and we have that, okay? Again, it's just super powerful when you have that, okay? Oh yeah, Don, I'll get to it. I just want to show you some examples. So Dominos, okay? Here was a nice one right here. We had divergence, and then that ended up being a trend changer. Okay, Dominos is one of my favorite trades this time of year for long. So again, that's what I'm looking for. Now, we had earnings coming up, you know, so I'm not going to take divergence. Right here was the green. I'm sorry, right here was the red to take it. When you have earnings coming up, there's always risk there. Okay. But again, I'm just showing you big picture here. Here's a crude oil on the 4-hour. You know, again, we had a divergence. So again, to clarify, what happens is on this candle here, because this is the 4-hour, okay? Once this 4-hour candle is over, if that requirement still met, it paints this arrow. It will not go away. Okay, once this next candle paints, this arrow will not go away, okay? Then you had a nice move down till it turned green, okay? So red candle's the enter, the way I use it, or a Laguerre RSI, which I'm not even showing today, okay? Because you can have any oscillator and be successful with it, okay? Okay, here's Facebook. And again, I'm very bullish on these tech stocks, folks. So I'm really using these to take profits, okay? But here was one, again, when you get to that, what is that, folks? A new high, look what happens. Very, very powerful, okay? That's one of the biggest takeaway I want you to have. Divergence at highs, wow. Could be great trades, but still wait for your trigger. You don't know how far they're gonna go, okay? I would have loved to see divergence down here to the long play, but we didn't get divergence on this, okay? All right, now let me go to 5-minute chart. Nasdaq. Let's see what we got recently. We had divergence here on Nasdaq right here. Made this move back up. Let me back up and see if there's anything else recently. Right here at a high, bam. Okay. XLC, we had a divergence here and then a divergence here. Okay, again, this is the high. Again, big takeaway for you all. Bring up a currency again, Euro US dollar. So again, we had a divergence here, then you get in, kind of consolidated, then down. See if we can find anything else here on the euro. Well, that's a long time on the 5-minute. Here's one. So you're in this strong trend. This is where you would take profits, right? See how that works? If you were in this trade, more than shorting this in a strong trend, you're better off if you were taking profits. If you would have got in here, basically you would have got out the next candle for a small loss, right? Here's one right here on the euro US dollar, bam. Spider, I had divergence right here. You're seeing off a 5-minute divergence on the spider, okay? Then you had bullish divergence down here. So again, you can kind of see how that all plays a role. Facebook on the 5-minute, let's see if there's anything right here, bullish divergence. Facebook's got a good seasonal to the long side, so I love to see that divergence there. Once the Hakanachi turns green, there's your entry, and so forth, okay? Okay, so is that clear? Big picture, you can do different time frames. Let me go back to the daily now. And now let me show you some cool stuff. So I'm going to click on the scan tab, okay? I'm going to scan in weeklies. You can scan in anything you want. I'm looking for, let me first start out with daily divergence. So this is my custom divergence scan. Okay, I'm going to hit scan. It's going to go through everything with the weeklies. that have weekly expirations. And for today, at this point in time, there's 2. So let me bring up Google. You see that? Okay. And the way I have it programmed is it's going to be, so this is today's candle right here. So it's the previous candle, right? Because if I did it for today's candle, this candle isn't done yet, the arrow could disappear, right? But now that I gave it to you for yesterday, which is the setup for today, right? This can never disappear now. Make sense? And what was the other one again? Scan, it was Tractor Supply, okay? So we had divergence yesterday on Tractor Supply. So what am I looking to do with this? So this is a nice divergence on Tractor Supply, okay? But this one, remember, do we have a trigger yet? We have a setup, right? The divergence, but I don't see a red Hackenacci yet. And honestly, folks, I wouldn't be diverging this anyway, okay? If I was long, I'd be exiting soon. This is a high, so you should all watch your chart over the next week. More than likely, we're going to get a move down on Tractor Supply a little bit because we're at highs and we have divergent, right? Make sense? All right, so the other cool thing about scans is I can change this D to any time frame you want. So somebody pick a time frame you want to look at. Anybody? Pick a time frame, 30-minute. Okay. So I'm going to change this to 30-minute and then hit scan. Okay. And so this is as of, this is 3:36 Eastern time. And you can save these all as a watch list and look through them. Okay. But let me grab one. I'm just doing it this way, but there's other ways of doing it. Let me change this to 30 minutes. See that? So showing you the divergence. Okay. Now you're waiting for a red candle, right? Again, you're not looking to enter, right? You're waiting for a red candle, however you want to play that. Okay. What was it? What was the other one? Let's look at CZR. Yep. Same thing on CZR. You had a high here. You got divergence. I'm just waiting for a red candle if I'm going to take it. Okay. Very specific rules. High probability setups using divergence. Okay. Let's say you want to look at smaller time frame. So I'm going to go back to scan. I'm going to go to, let's do a 1 minute. Again, you can put futures in here, Forex, anything you want in your scans, right? 1 minute might take a minute here. It's doing a lot of calculations and it can move fast. So let's look at CME. See the 1 minute divergence there on CME? Pretty cool, huh? So you can also, if you use Market Watch, okay, once you have it, you can add it in here and you can have, for example, you can have your time frame 5 minutes and you can have divergence showing you. Okay, so there's different ways of doing it as well. Okay, but that's the scan feature. And what I meant by that is if you save this down here as a watch list, and let's say you call it 427 divergence. Okay, I'm not going to do it, but let's say you saved it. Then it could be over here in your personals and you can look them all up that way too. Okay. Now, what I've also done, I like scripts, right? Watch list scripts. So let me explain this. Okay. I've also programmed it to show you on your watch list of whatever you have, if there's an N for no divergence or an S for a short, or it'll show a L for long. So you see how Google, let me show you what time frame this is. I want to make sure. So this is the daily divergence. You can change this as well to any time frame you want. Okay. but I got daily divergence on here, okay? So if I go back to, we looked at Google, let's look at Tractor Supply. I'm gonna go back to daily. Okay, so you have that divergence. So when you have your watch list, okay, you can put as many as you want. The more you have, Thinkorswim freaks out, right? It can only handle so much stuff. So I like to have just a divergence of my favorites. When you get an S, you've got the bearish divergence. By the way, you see the label here? I never did tell you. It will tell you that here too, okay? You look at Google, right? Same thing, potential divergence there, okay? It'll be, if there was any long, the bullish divergence, it would show an L here. Okay, so that way, as you're kind of looking at your stocks, you also just know by looking if there's any divergence, okay? The other thing I can do is, let me go back to that. It's very easy. I can change this instead of a daily. Let's change it to a 15-minute, okay? I'm gonna hit apply, okay? Now you see it recalculating. It's looking for divergence on these stocks for the 15-minute. And again, you can put futures in there. Let's look at the ES, for example. You can look at anything. So right now, I'm not seeing any divergence on the 15-minute for these particular, their stocks. Okay, Netflix is still loading. Okay. So you can have the watch list, you can have the scan, and so forth. Okay. Any questions on that? All right, so what I'm going to be offering, if you like this, there's two packages. Let me just explain. So I'm going to put it in the chat as well. If you don't have anything yet, if you didn't buy the divergence indicator already, many of you have the divergence indicator, you just don't have the scan and the watch list script, okay? Bear with me. The one I just put in the chat is for $548. It's going to be, this is a pre-launch special for 3 days. It's going to have the, let me bring this over here, bear with me. Okay, it's going to have the indicator, right? The line in the chart, the scan and the script, okay, for $548. Okay. If you already have the indicator, then what you're wanting is this one, which is just the scan and the script for $349. Okay, regular $499. Okay, so if you've already bought, what I mean by that is, if you already bought this part of it, okay, then you only need to buy that second portion, which has the scan and the script. Okay, and again, this is for Thinkorswim. It will come out in TradeStation here probably about a month from now. Okay. Are there any questions? So the links are in there. We'll also be sending an email with the information. But again, we were 42 minutes in, kind of what I thought we would be. I want to see if there's any questions or if you want to see anything before we conclude today. The other thing, let me just kind of bring up, those of you that are new here, let me just hide that. Make sure you're registered for my twice a month webinars on Wednesdays. Let me put that link in there as well. Okay. I show all my indicators that I use and how I trade every other week. Okay. Yeah, absolutely. So yeah, in the video, I show how you set up the script. Okay, and I can send that to you, Patterson, as a VIP member. But you basically go to set up open shared item, same thing, and then I'll give you a code, and then you just click on the little gear up here. So it's a 20-second ad, very, very simple. Okay. Grant, the dots on the bottom is the Hackenachi dots that I programmed. Again, today's more about the divergence, but certainly email me if you are interested in that Hackenachi system. That's one of probably everyone's favorite because it's great to keep you into the trade and when to exit with divergence. Super powerful because again, Google's a good example on the daily, right? Even though we have divergence here, right? I'd be looking to exit this now probably when we got a next red dot. Or if you're looking to take this short, you don't want to just take it short. You want to wait for that red Hackenachi, right? Well, great, John. I'm glad you're enjoying that alert service. Thanks a lot. Appreciate it. All right, folks. Well, again, this will all be emailed out to you. If you have any questions, don't hesitate to reach out. Again, this is the email. This is my personal cell. Feel free to text me if you have questions as well. Other than that, folks, I hope you learned a little bit about divergence and how I use it. And I wish you all the best. And I'll see you on the next live webinar. Take care, everyone. Bye now.